An early warning system for foreign exchange online trading system is presented. The warning functionality helps the trader's attention on specific situation on foreign exchange market. This model is developed using combination of 4 technical indicators. Those are stochastic oscillator, moving average convergence divergence, relative strength index and ease of movement, continued by execution of the positions. The system has been tested on euro to US dollar and pound sterling to Swiss franc foreign exchange real data pair and a MetaTrader expert system. The value variation and combination of parameter gives different performance. Back testing using euro to US dollar gives 20 combinations providing positive profit, 1 combination providing 0 profit and 3 combinations providing negative profit. Back testing using pound sterling to Swiss franc currency pair gives 12 combinations providing positive profit, 1 combination providing 0 profit and 11 combinations providing negative profit. Introduction. The fluctuation of foreign exchange trading is very interesting. This movement is influenced by many factors, such as economic, politic and social factors. These factors are well known as fundamental analysis. For some reason, sometimes these data cannot be obtained or distributed evenly among investor or traders. Other approach to predict the fluctuation is by using technical analysis. The stochastic is composed of 2 exponential average lines designated as the percent Klein and the percent D line, which oscillate between 0 and 100. The percent K line is calculated as the difference of today's closing price and the period low, divided by the difference of the period high and period low. For better presentation, this quotient is multiplied by 100. The percent D line represents a simple moving average of the percent K line and therefore reacts less sensitively than the percent K line. The formula to calculate component percent K, answer 5, is technical analysis is more focused on price behavior in the past that can be used to predict future price. Stochastic oscillator, moving average convergence divergence, relative strength index percent K equals 100x where recent, close, lowest low N, highest high N, lowest low N, 1 and ease of movement are some sample of popular technical indicators used. These indicators sometimes give opposite recommendation to open position, thus a combination of these are required. Because of the 24 hours market open, an expert advisor that enables to open position automatically is required. Stochastic oscillator. The stochastic indicator developed by George Lane is designed to relate the difference between a day's closing price and the period low with the trading range of the observation period. The stochastic quantifies the position of a price within the prevailing price range, person, 4. N equals number of periods recent close equals closing price of current period lowest low equals lowest low during N period off time highest high equals highest high during N period off IMA. A value of 0 indicates that the closing price off underlying instrument corresponds to the lowest price in the observation period. Analogously, a value of 100 shows the closing price represents the highest value in the observation period. Stochastic values above 80 define an overbought condition, those below 20 an oversold condition. There are several ways of interpreting the stochastic oscillator. Buy when the oscillator either percent K or percent D falls below a specified level and. The first international seminar on science and technology January 24, 2009 ISBN 978-979-19201-0-0 preceding book 1016 then rises above this level. Sell when the oscillator rises above a specified level and then falls below this level. Buy when the percent K line rises above the percent D line and sell when percent K falls below percent D. MACD indicator is similar with stochastic oscillator whose purpose is to identify overbought and oversold condition. The value is a range between 0 and 100. The condition to buy and to sell is the same with stochastic oscillator. The value of EMV is computed below, Investopedia, 2. Moving average convergent divergent MACD, is a further development of moving RSI equals 100? 1001 plus RSN4 average. This technical analysis utilizes exponential moving average, XMA, by subtracting the value of long XMA